Welcome to the Rebel's Edge. I'm Pete Najarian. That's John Najarian. He's got a toupee on today. He looks fantastic. I've never seen him look better. Oh, wait a minute. Hold on. That's Mark Lepresti. Mark, you look fantastic. You always do. You're always, dressed to the nines, and it's very appreciated. And I felt kind of guilty. I'm always wearing golf shirts and stuff, but anyway, it's a wild market, isn't it? Is it crazy or what?
It is. At least you're wearing a shirt, right? I mean, let's start there. Let's just temper expectations, Pete. Come on now.
That's all the fault of my brother, who, by the way, I know he's the older brother. People think we're twins. We're not. He's 6 years older, actually. So either he's very youthful or I'm very old. I'm not sure which, but unfortunately, I think it might be number two. But the guy always, he does stuff like that, Mark. We're sitting there down in Miami. We got a conference going on, and the guy takes a picture of me with just a towel on. I did have a towel. And then puts it up in the internet world. He puts it up on Twitter. The whole world's looking at me going, hey, what are you doing?
You almost broke the internet with that tweet. And unfortunately, I know exactly the one you're talking about because it's burned into my retinas, Pete.
You can't forget it. You can't unsee that, unfortunately. No. So I apologize to everybody. Hey, we're going to jump into it now. We got the macro minute, Mark, and you know what? All I'll say is, retail sales on top of the Fed, the combination of both of those, I think, is what's causing the markets to absolutely just pull their hair out, get angry about everything. And obviously, when Powell says we're going to do something a little bit more and a little bit more, that seemed to be something that caused the market to say, you know what? The heck with this. We're selling. What about you, Mark? What's your macro?
Yeah, there's no question, Pete, that notwithstanding the fact that they delivered the 50 basis points that the street was expecting, investors and the markets putting J-Pow and the Fed on the naughty list this year because the commentary around that 50 bip hike was very hawkish, right? So we're expecting 2023, at least the first half, to continue to be dominated by Fed speak and action driven by what the Fed does, indicating that they're going to push hikes to as high as 5.1% as they continue to battle this runaway inflation. Look, the problem there also, Pete, is that's 50 bips higher than what J-Pow said back in September. Yep. Today's job numbers not helping either, coming in lower than expected, right? Powell actually wants to see the employment picture cooling, people losing jobs. Hard to understand, but it's true. So, look, we expect the recessionary conditions to continue through at least the first half of 2023, unfortunately.
Fully agreed. And all of what you said is exactly why we're down as much as 800 points on the lows so far on the day and just getting cracked. And it's technology that's really getting hit. We're going to jump into that world. It's not just technology. We're talking about semiconductors. We got Western Digital here. Oof. Now, this one, Mark, is a pretty interesting. It's down. It was down 5%. I'm sure it's down even further now, but it's sitting right around the 2-year lows, which that's not very impressive. Year to date, it's down about 45%. They're talking about inventories. They're talking also about they've got some cash drawdowns that they've got to do. This is a company that's already got $7 billion in debt. When you put all of that together, you can kind of understand why Western Digital has underperformed all year and continues to get hit to the downside. Then, on top of everything else, and I always, this bothers me, Mark, when this happens, but they decided, well, you know what? Goldman Sachs said, we're going to downgrade the stock today. I think you might have could have done that maybe 3 months ago, maybe a month ago, maybe even a week ago. But it's amazing that this is the time that they put the downgrade out there. What do you think about Western Dig?
Well, listen, I get very frustrated, too, when you have people getting paid millions of dollars to do stuff that's literally Tuesday morning quarterback. You want to downgrade the stock now? Geez, thank you so much. We didn't see that coming. What's happening here with WDC, though, Pete, it's beyond just that. Companies that are involved in manufacturing devices for data storage are not only facing these inventory level problems, they're facing problems driven by inflation and increased prices. Demand destruction on consumer discretionary for things like smartphones, tablets means you need less of what WDC makes. And finally, remember, all of that data storage is moving eventually to the cloud. So I see long-term headwinds for companies like WDC. So I'm not buying even at this holiday discount price. No thanks.
I'm with you on that one. On Novavax is our next one. Now, this is an interesting one, Mark, because these guys just seem like they just want to burn money as fast as they possibly can. The free cash flow burn here is absolutely outrageous. This is a $126 stock in January. Today, well, it's about 1241 on the lows. I mean,
Yep.
you're talking about a stock that's been absolutely hammered. Why is that? I'll tell you why. Because basically, they've put all their energy, everything is into the world of COVID. And that's fine. And that was fine. But you got to have something else. They've got a lot of respiratory things that they are working on, of course. But the problem is it's kind of a one trick pony. And I think when you look at that, and oh, by the way, they don't make any money. I've never liked stocks that don't make money. Once you're mature enough, you might be able to go and get into the public markets and you're still working on things. But when you're like Uber or you're like Peloton or some of these others and you can't figure out how to make money, and it's been years and years and years that you've been out there in the public markets, that's a problem. I'm staying away from this one. I think there are better opportunities out there. What do you think, Mark?
Yeah, no, listen, I totally agree. Hitting a new 52-week low, I think, today, Pete, just as before we went live on Rebel's Edge. Look, this thing was a pandemic darling. It was up 700% at some point in time in 2000. Big shocker, right, on people making bets on who was going to come out with the best COVID vaccine. And their COVID vaccine wasn't even approved in the United States until this summer. So, geez Louise, were these guys late to the party. So, for that reason, in addition to the fact that their only a potential lifesaver is this flu and coronavirus vaccine that's slated to start phase 1 in Q3 of next year, man, oh man, I am not a buyer. I am not interested. I'm a seller if I own it, and I am staying away from this one.
Yeah, I totally agree with you. I think there's so many better opportunities out there that it's almost ridiculous. Roblox is our next one. And we're going to go to another name. By the way, down about 15% today. They were 108, and now they're trading around 27 bucks. I mean, it's just abysmal to watch what happens to some of these companies. And it's one thing, Mark, that I tried to pound the table on throughout the pandemic years, the first 2 years, obviously. And I've said, look, you can't have triple digit, quadruple digit, or zero when you look at a PE. Well, that's basically what we're looking at here with Roblox. They have no earnings. They've got a price, so they've got the P that's fine. The E is the problem. They got no E. They got no earnings. These guys are absolutely terrible, but they're really good at one thing, losing money. And they continue to do that. So when you look at Roblox and you wonder, hey, maybe I ought to dip my foot in the water on this one, I'm saying stay away. How about you?
Yeah, unfortunately, I'm saying stay away too, because despite the fact that the stock's down 72% at current price before we went live on a year-to-date basis, to your point, they're not making money. And in a risk-off environment, in a inflationary, recessionary environment that we're in, going back to our macro minute focus, companies like this don't get rewarded for DAU, daily active user growth. They get punished for not having the E, earnings associated with that daily active user growth. You cannot rely as a growth tech stock on just saying, hey, we've got more people engaged, we've got more people coming online, and we'll figure out how to monetize it later. Markets in these conditions say, no thanks. I think this thing could go even farther before we see it hit its bottom.
All right. Well, we're not exactly bringing a lot of Christmas glee at these things, but we're just being honest, folks. You got to be honest. You don't want to just snow it up just to stick with the Christmas theme. All right. Now we've got the trade desk. This one's pretty interesting, Mark, because it's another stock that's gotten absolutely hammered. It's down 46%. They do have a higher PE, but they actually do have an E somewhere involved in this one. They got great free cash flow. They've got about 500 million in free cash flow. So there's a lot of different aspects about this company that some of them are negative. There's no doubt about it. Jefferies had a downgrade today. They have been slamming this stock. But when you look to 2023, which you better start looking that direction, in my opinion, this is a company that has all kinds of growth. And I think the E will start to explode as we get into this next year. And there's a lot of things when you look back at the most recent earnings report that you say, you know what, if they're right about some of these projections, they are on the right trajectory to get somewhere, and other than the fact that they're down 46% year to date. So this one I actually like, Mark, and part of it is they actually got money. They got free cash flow. They're not burning it. What do you think about this one?
Well, listen, they're also in a space, Pete, that I love, right? Data-driven ad tech. It's where the advertising industry is going. We were having a conversation with one of our mutual friends, I won't say who, out on the West Coast, well-known name in podcasting and things of that nature. And I said, look, guys, you got to get on these ad tech platforms. This ain't Mad Men in the 60s where you're selling ad time over 3 martini lunches in Manhattan, unfortunately. So ultimately what's going to happen is ad tech is dominating how things are happening in the advertising space. These guys are well poised for it. The stock's just got to come in with a reasonable price at a 600 PE right now. Jesus Christ, it's ridiculously expensive. So I would look to in 2023, if this thing comes off, we start to see a more reasonable PE ratio and it becomes more appropriately priced. I would consider buying it because I love the space and I love what their positioning is in the space.
Well, I'm going to check with Jared. Jared, how's that sound for Mark? I heard you say something about maybe we dropped it for a second, or are we okay? He's back. Mark, you're back, baby.
Well,
you're back, baby. So now we're going to hit a little bit of unusual option activity, Mark, and I'm going to start it off with Marathon, M-A-R-A. This one's pretty interesting because a year ago, this is a company that was sitting out there that had a market value of $3.4 billion. This is crypto mining. You know what their market cap is now? $580 million. That gives you a little bit of an idea of what's going on in the crypto space, right? So when you look at the cash burn, it's only a cash burn of $1 billion. That's a bit of a problem. They got about 36% of the shares out there are short. Now, it hit 52-week lows today, Mark. It was trading $4 and I think 32 cents, something like that. But here's what they're doing in the options world to maybe be able to make money off a stock that's really crumbling right now. There's a buyer out there of 15,000 of the January 3 puts. Those are only going for about 22 cents, something like that. So risk reward, I already like it. Also, one more kicker to this whole thing. The folks that had owned the December 5 puts and the December 6 puts made money on both of those. And today they are selling the 6 puts, they're selling the 5 puts, and now they're rolling out to January and these 3. So those are the kind of trades I like, Mark. I still look at the crypto world as it's still not over. I think there's a lot of pain still to come. And so I'm leaning on the fact that I like these puts enough. I'm owning these puts, and I think it is going lower. I think this company might go to zero.
Oof. I like the trade too. It's another great example of the power of unusual and what the great team at Market Rebellion delivers to the subscribers every day. I do think there could be more room for this thing to fall, and I unfortunately think there are several other shoes to drop in the crypto space. Binance. Anyway, so I've got some unusual too, John, and this one, Pete, I'm sorry. I'm so used to doing it. I'm really, wow. Anyhow, this one I'm getting a hard time wrapping my head around. It's a company that I know pretty well. I've met with the CEO and the board on a couple of different occasions, not currently in my personal portfolio. We're talking, of course, about Plug Power. And we saw a pretty big print that Unusual picked up today, 20,000 of the March 10s in almost in one print. So this is a very, very interesting bearish bet on this stock, which is completely contrary to what virtually all of the analysts think. The average price target for this thing is at 30 and a quarter. 29 analysts that covering it, all essentially saying that it's got about 100% room to run. Now, obviously, those price targets go well out past where these March 10 puts are. But also, this is on the back of some really interesting news the company put out just today to supply green hydrogen to Nikola. Another deal that they indicated to supply 500 tons of green hydrogen to other players within the United States. So I'm finding a hard time understanding what news is behind this type of activity. But then again, that's part of why it's called unusual. So we're going to be watching this one really carefully.
And Mark, potentially that could be a hedge. You never know. Puts are always a really difficult thing to look at and try to figure out. So it could be a hedge to the downside, just in case there's a little bit more. So it could be a hedge, or possibly it is put buying looking for further room to the downside. All right, Mark, how about that venture minute? You get to kick it off.
Well, in today's Venture Minute, we're going to feature a company called Phunware. It's NASDAQ listed. It's PHUN. And when we talk about data, which we spend a lot of time talking about on the Venture Minute and in general, this is a company that is at the forefront of taking user data, geolocation, things of that nature, and helping brands and advertisers engage in a meaningful opt-in way. They are doing deployments at large-scale venues like the Atlantis in the Bahamas. If you've ever been there, Pete, it's very hard to navigate. It's a huge property, and I'd like to know, hey, there's an opportunity for an event at a discount at another part of the property, and this data can sort of help push me in that direction again on an opt-in basis. They're at the forefront of helping users get paid for sharing their personal data, which we think is really important. Using some blockchain technology to do that. And so we like this company. This is a company that has been a Moneta Advisors client for a while now. So got to give that disclaimer. We have been compensated to cover this company and help bring their awareness of what they're doing to the market. This is not a recommendation of the stock, buy or sell, of course. But we do like it. PHUN is the symbol, helping brands connect with their user data and monetize in a more meaningful way. That's today's Venture Minute.
Appreciate that, Mark. Now we're going to jump to sports because we get so excited about that. We all just love all these different sports. But I'll tell you what, the NFL particularly, how about this tonight? I think there are three main games that everybody should be focusing on for this week. Number one, tonight, you've got the 49ers in Seattle. Here's why this one's pretty important. I think the 49ers are rolling. I think they've really put together an unbelievable team. We gave props the other day to John Lynch and the job he's done as a general manager, just doing an incredible job through free agency, who they've drafted, how they've built a defense. Now they've got the offense, except for one thing. Trey Lance is down, so that kind of hurts a little bit. Jimmy G is down. That kind of hurts a little bit. Brock Purdy is questionable. So there's a possibility that Josh Johnson, at 36 years of age, played at the University of San Diego, may be the quarterback in that game against Seattle. We'll see how that all plays out. But that's also a big game. It's a divisional game. And Seattle is on the cusp of being a pretty strong favorite type group. And when you look at that team for the playoffs. So that's one of them, Mark. What do you think about that game? I got a couple other games, but what do you think about that game?
Well, listen, I like San Francisco, right? They're riding high, coming off a 6-game winning streak, 30-17, a regular session record against the Seahawks, but they have lost 14 of the last 17 out of that 30. But then again, Seattle has lost 3 of their last 4 games, trailing behind San Francisco's record. Vegas likes San Francisco. I like San Francisco, so that's where I'm putting my money. I just don't have a spread to offer.
Then we got Saturday night. So Saturday night, I think a big game, and there are games on Saturdays, folks. This is not this is the NFL. They can put it on TV any night of the week. People are going to watch. Miami at Buffalo. Miami's lost a couple in a row. They look like they're not the same Miami that everybody was so excited about maybe a month and a half ago when they were just going through everybody and Tua was the man. That's changed a little bit. And Buffalo, they've got a few bumps and bruises themselves. What do you think about this game, Mark? Because it could be pretty interesting, and it's within the division itself.
Yeah, and listen, I think back to, I guess, it was 2020 in the NFL draft when it was all about Tua and how he was going to be the next Brady, the next great quarterback. But listen, I think overall, the Dolphins' prospects do look fairly grim. 2 straight losses, putting their playoff hopes in peril at this point. And, looking at what the guys that put the odds on these games, Buffalo is virtually the unanimous favorite to win by an average of about 10 points. So that's my expectation of how Saturday night's Miami-Buffalo game is going to play out.
All right, now we're going to go to Sunday, the regular football day for the NFL. But this game, I think, is the most interesting game of them all. Because you know what? Miami's most likely going to be there somewhere in the playoffs, even if they're a lower seed. Buffalo's obviously number 1 in the AFC. San Francisco, kind of the same thing. Seattle's got a nice shot as well. But how about this one? Everybody wants to just flush the toilet on the Detroit Lions. Well, you better not do that because they've won 5 of the last 6 games. And by the way, their one loss, the Buffalo Bills, in a very close game. 28-25 was the score in that game. So this is a team, Jared Goff is directing them. He's got 8 touchdowns and 0 interceptions in the last 5 games. They are on their A game. Their offense is absolutely explosive. One of the top offenses in all of football, and they're doing it through the air with Jared Goff and his arm. Now, the interesting part is going to be the Jets are outstanding on defense. So we've got a pretty fun matchup here. We've got the Jets who have no offense. They have no clue who's going to be their quarterback either, but they've got a great defense. So I think this game is going to be really interesting. I'm leaning towards the Lions because I love Dan Campbell, and I think I've fallen in love with this Lions team. We're in the Lions colors, for crying out loud. What do you think about this one, Mark?
Well, listen, as a New York / New Jersey guy, I gotta like the Jets. The Jets have been getting flushed down the toilet in every possible way for as many years as I can remember. So hearing that their defense or anything is as good as they have looked recently is terrific. The Jets, of course, sitting third in the division after losing 3 of their past 4 games, and are unfortunately coming into this off of a 2-game losing streak. So we'll see. But my geographic loyalty has got to have me betting on the Jets. So Jets.
And I love that, coach. I like that team a lot. Yeah. I think that defense is fun. I'm being a defensive guy. I just love great defense. We're going to go to college football now. Now, Mark, you and I were talking beforehand, and you were like, you know what, Pete, you can do the college. You're going to be part of this because this is a really fun story for you. There are 43 bowl games in college football. Yep. And I guess the question I would ask, and don't answer it yet, but are there too many? And I'm going to tell you no, and here's why. Every once in a while, you get a game that's just unbelievable that you never expected. I'm going back to 2014, and it was the Bahamas Bowl, which, by the way, plays tomorrow at 11:30. Nobody really knows it. It's Miami, Ohio, University of Alabama, Birmingham, 2 6-6 teams. Nobody really cares, right? It's probably there's going to be me and you watching, Mark. That's probably going to be that it. But you go back to this game, 2014, the very first year, the Popeyes Bahamas Bowl back then, a different name now. But it was on Christmas Eve. I'll never forget it. My wife's going, you're going to be doing a football game on Christmas Eve? I said, yes, honey. I'm doing the color commentary. I can't wait. It's going to be great. So this is a game with Western Kentucky against Central Michigan. Now, the only reason you know Central Michigan is probably because of their quarterback, Cooper Rush, and who's gotten a little bit of prowess because he's been out there. He's been in the NFL a long time now. He's actually directed the Dallas Cowboys on multiple games this year and last year where he's won football games. Pretty daggone good quarterback. In this game, at one point, the Chippewas were behind 49 to 14. Then they score 4 straight touchdowns. So now the game is within 7 points, Mark. We're now deep into the game. It's getting more exciting. We got 1 second left in the game. They're 45 yards away. The quarterback throws the Hail Mary. The guys then catch it. They actually catch it, and they do a lateral, and then another lateral, and then another lateral. And on the third lateral, that guy runs it in for a touchdown. Now it's 49-48. There is no time left on the clock, and they go for the 2-point conversion. They don't get it. But it was 49-48. It was the best ending of a game I've ever seen. You had 2 quarterbacks who were throwing the ball all over the place. The scoring was unbelievable. And you know what? For that reason, 43 is not too many because it was in that game, which, like I say, this year, it's now called the Hometown Lenders Bahamas Bowl. There's just too many, but yet there might be not enough because those kind of games are really fun. What do you think, Mark?
Well, I'll tell you what, Pete, I'll sum it up thusly. As anybody that watched John and I do the Rebels Edge on Monday knows, I had the privilege on Saturday of attending the Heisman Awards ceremony here in New York, live at the Time Warner Center. What an incredible experience. What a classy production. But getting the real story of the adversity that these candidates, these 4 very, very, I think, almost equally eligible candidates faced, and seeing the game footage from the kind of games that, but for some of these bowl games, but for people like us and diehard fans that are watching, college football, you would miss that kind of demonstration of athletic ability. You would miss identifying the next Brady, the next Tua. So I'm down and I'm hooked on college now. So I'm ready. Anytime we want to talk about it, I'm good to go.
I love it, man. And those guys are so talented. The commitment that they all make to their job of not only being a football player, but being an athlete, a student athlete as well. These guys, many of them are unbelievable at the college level. People have no idea how committed they are to getting their degrees. I'll give you one example and then we're done for the day, Mark. But I was talking to the Viking running backs just last year, not this year, but last year. And I'm sitting in the room with 8 running backs. 7 of them already had their master's degree. How about that? I mean, that's pretty daggone impressive, right? I mean, when you think about that these guys are not just there to play football, but they actually get their degrees and they graduate in 2 years, 3 years, and then get their master's while they're still in college. The whole thing is unbelievable. It's great. Well, Mark, thank you so much for being a part of the Rebels Edge today. I hope everybody has a great weekend. And again, some big football games out there. Keep an eye on them.